Hi, welcome to the Active Value Investor channel. My name is Victor, and in this video, I'm going to be covering Netflix. Today, there was a lot of news on Netflix. They announced their earnings. It's January 19th, 2023. And overall, their subscriber growth really went up. Their profit went down a little bit, but their free cash flows were really good. I'd like to take a closer look and take you along on one of the investments I've made more recently. I like to scorecard my investments, and really the scorecard consists of 4 questions followed by 1 decision. The first question, is it an industry I want to be a part of? Is the company operated and performing well? Is debt under control and less than 3 times EBITDA? I want a discount on the stock, and based on those 4 questions leads me to a decision. Would I buy additional shares of the stock? Let's take a closer look at Netflix. So Netflix is the clear leader in streaming. I think really the battle has been lost, and everybody's chasing Netflix when it comes to paid entertainment, streaming. And they have a lot of avenues for growth. Live sports isn't part of Netflix just yet. They're looking at buying the WWE. So a lot of things could be growth catalysts for Netflix. And internationally, they are just booming as well. So it's clear that Netflix is the leader in streaming without really much argument from anybody else. If you look at Netflix over the last 5 years, it's really been a roller coaster. This company is a great success story and really built up their stock price and overall market cap over the years they've been in business. But toward the tail end of 2021, they began to go down, and from the peak down to the trough, they went down more than 74%. 74% for the most successful streaming company, well-operated, very, very popular company, which I thought was ridiculous, frankly. I was not an owner of Netflix stock during this big drop. I'd owned it in the past, but I had exited the position because I thought the stock price was too high. Over the last 12 months, if you had bought roughly, middle January 2021 and held it to, January 19th, 2022, you'd be down 37%. But if you look at just in the last 6 months, if you had bought the stock 6 months ago, you'd be up 46%. So really timing and looking at stock is critical. Warren Buffett, famous quote, "Be fearful when others are greedy, and greedy when others are fearful." How do I value Netflix? I value companies on free cash flow. Free cash flow really tells me, how valuable the company is, and you can really see that companies like Google, Microsoft, Apple, they have great value because they produce great cash. In case of Netflix, they produce really good cash now. For a long time, they didn't. They continued to grow and really pump a lot of capital into their business, but now they're beginning to really get a lot of free cash. For the full year 2022, they generated $1.6 billion in free cash, which is great because they've been a high growth company. And they have a very strong balance sheet, less than 3 times debt in EBITDA. So that ratio is excellent. So it makes them a very low risk company. And their weighted average cost of capital is low compared to other companies. So those are factors that I use in my model to compute the intrinsic value of the company. I expect that their free cash flows will grow at 15%, not necessarily in line with their subscriber growth or their revenue growth, but because now that their business is beginning to mature, they don't have to put as much capital into the business any longer. They can really use, the content that they've developed over the last couple of years, or really over the last 20 years, and repurpose it and reuse it and not have to put a lot of capital back into the business. With those factors in there, and based on that growth rate, my intrinsic value for Netflix is $106 billion, but their market cap has risen to $140 billion. Therefore, right now, buying shares, you'd be buying at a 24% premium. So it's a great success story that they're growing subscriber numbers, but right now, just the numbers don't tell me that there's value to be had in Netflix stock. So just a quick analysis on Netflix. Their performance, especially in 2022, I applaud them. They grew their revenue 7%. Their PE is coming down. It's down to 28. Free cash flow of 1.6 billion, excellent. And they have a free cash flow yield of 1%. It's for a high growth company, I think that's okay. Paid memberships really went up well, 7.66 million new subscribers, which is phenomenal. And they grew 3.4% in the last quarter. So they forecast to continue to grow revenues by 4% and really have good margins. Their margins continue to improve, 21 to 22% operating margins, and they expect to have solid free cash flow. My outlook is the company's doing really well. This is a long-term value play here. I think buying on big dips is a good idea, but I will not be adding shares unless I see a big dip and an opportunity to take advantage of. So back to the scorecard. This is an industry I love to be a part of. I've been a Netflix customer since I used to have the actual DVDs delivered to my house in the mail, if anybody was a customer, in those days. And ever since they went into streaming, I became a customer. So I'm a fan of the industry. I'm a fan of the company. So it's fun to be a part of the industry. This arguably is the best media company on the planet right now. It's hard to argue because they are really innovating and leading their industry. Very good balance sheet. Unfortunately, you're not getting a discount on the stock. I'm not getting a discount on the stock. Therefore, I'm not ready to buy any additional shares at this time. I'll wait for prices to get better, or potentially in a quarter or two when their financials come out. If their free cash flow really changes, then maybe that changes their valuation, and then I would be a buyer. So thanks so much for watching my video. I really appreciate it. And just keep in mind, this is a video for entertainment purposes only. I like to share my experience as I invest in companies like Netflix, and I'm not recommending that you buy any particular stock or security.